Hi, welcome to the trade of the day for Tuesday, 19th of August. My name's Tom. I'm a senior trading strategist here at Trendsignal. And I want to take a few moments to go through a couple of trades. We find ourselves sometimes guilty of looking at the big movers, but the real bread and butter of the end of day strategy we use is the small trades that we pick up on a daily basis in and out of the markets to make the max use of our accounts. So there's a couple of positions I want to show you. First of all, we'll start with this trade. It's the Canadian dollar versus the Japanese. We're looking at a short after a recent buy trade in line with charting pattern. Let's go through the steps to making sure that this is a proper position. We'll then talk about the stop losses, the take profits, and what this actually means for our real accounts. So looking at this, we're on daily candles. Each one of these candles is a day's worth of price action. We have a red sniper disc. It's a red sniper disc with a grey infill. Now, the grey infill doesn't change really the way we're going to manage the strategy on the basic rules, but it lets us know that this is a continuation of a previous trend. We've had a move down, a pull back up, and now we're looking to resume the course back down in the regular order of business, if you like. What you do is you click on the sniper. Automatically with our trade mate tool, this will give you a couple of kind of like recommended settings. You have an aggressive stop at 36.6 pips, a start target at 50 pips. To confirm that this trade is worth taking in the first place, we need to make sure that essentially we've seen a cycling of the momentum in the market. We do that through two different indicators. Okay, we look to the bottom of the screen. If I minimize this, you can see red to green to red. The change color is what's important. We go from green to red, means essentially we're looking for a sell side on this trade. We then have a look on the medium time frame. Here we go, red to green, back over to red, again moving to the sell side. And in addition, while it's not needed necessarily, we can see that we go from blue to orange, telling us that the higher time frame is also supporting us. So we have all the streams lined up in our favor. We enter the trade. We close at the end of that day, 10 o'clock. The next day, we hit our target 50 pips away. Now, 50 pips may not sound like a lot to a lot of you, but I mean, if you're trading with a beginner account, 50 quid isn't nothing to sneeze at. But even an intermediate account, 150 quid for a day's worth of work. You come in, you do the work in the evening, 20 minutes a day, and you walk off with your profits. It's actually an interesting point about this trade, actually. The reason we look for these extra positions is just to make sure that we're not getting something which triggers the signals but doesn't actually have the market structure backing it to be a reasonable trade. So you can see here you've got this blue infill green sniper. And there's a couple of things that may make you think this is a really good position. Okay, we have red to green change color in the medium. We're in line with the intermediate trend. There's no change, but that's fine. It's just supported by the previous action. But what you'll notice is down here we're still red, and we don't have a flick back over to green, which means that this isn't a sniper we would take. And luckily we didn't, because it comes back up a little bit and immediately reverses back down. So that's one of the trades. Let's also have a look at the Euro Australian from the same day, and we'll see a similar pattern. So taking this trade, same again, green sniper disc, continuation of a previous trend, green to red to green. The red to green is what we care about. We have a changeover in momentum. Red to green, we're also in line with the intermediate trend. And we have a few extra factors in here telling us that this could be a good trade. We're in line with the monthly trend. That's what the NT means. And we're in line with a charting pattern, which extra factors, it's more strings in your bow. It just means that you're more likely to try and target a more advanced target. So if you were going for the extended target or the starter target, it worked either way. So 89 pips, again, trading at £1 per pip beginner account, 89 quid. You don't need to be trading on too large an account to turn this into some serious money. And I suppose we'll finish with one more opportunity. Let's go for the New Zealand JPY. Let's have a look at this one. This is a short this time. Red outside, telling us we're looking to sell into the market. We've got a grey fill, which tells us we're looking at a continuation of a previous trend again. Okay, green to red, green to red. We're in line with the intermediate trend, and we also have a charting pattern in our favour. 30 pip target, £30 in your back pocket, £3 a pip. You're looking at 90 quid. Essentially, if you're taking these on a daily basis, there's multiple hundreds of pounds that you can build up while you wait for those big movers that are doing 500 or 600 pips. And if you're not taking them, what are you doing? Because they are trades that are so high certainty. Every single one of these closed out within one day. Sometimes you just take the winners where you can get them, and you wait for what else is coming up. If you want to see more about trading this style, including getting some of the trades that we'll be looking to take later this evening, we do have a live trading session tonight at 7 o'clock. We'll go through how to use the tools, we'll go through the risk management, we'll go through managing these trades if they do last longer than a day. But more importantly, we'll also show you the positions we're looking to take later at 10 o'clock tonight. There should be a form around this video to join us, so hopefully I'll see you in there, and we'll catch you soon.